RBA Governor has been giving a speech today. We'll get some instant analysis with Warren Hogan, his economic advisor at the Judo Bank, a regular on this program. Warren, thanks for your time. What did you make of what you've heard from the RBA Governor? Anything different today?
Hi, Kieran. Yeah, no, it doesn't look like their tune has changed at all. Pretty much more of the same. That is, that inflation in this country is going to remain low, only pick up gradually. Wages growth will only pick up gradually. And because of that, interest rates can remain at these rock bottom levels for another couple of years. That's the view they've been pushing. And of course, it runs up against what we're seeing overseas. And indeed, the view is of many economists who think inflation's a bigger threat to Australia than what the RBA is suggesting. He did say that if things do change, they'll change their view and an earlier rate hike could be possible. But at this stage, they're very much sticking to the view that interest rates are going to remain where they are for the next couple of years.
Well, that would be quite a disconnect then, wouldn't it, from what's happening in the United States, where the inflation rate is a significant issue right now, Warren?
Yeah, and the governor did address this. I think this is the aim of the speech, was to highlight the differences between Australia and other countries around the world, which are experiencing nothing short of a surge in inflation. In the United States, the latest reading from a week ago had inflation at over 6%. UK inflation's rising. We've all heard the stories about supply chain bottlenecks, shipping costs. These inflation pressures are global. They're filtering through all economies and showing up quite severely in the United States. Wages growth, which the governor says is crucial, is rising in the US, but it's not rising by as much as inflation. So inflation's up 6, wages are up 4, in contrast to us, where it's only up about 2. But of course, that still sees people going backwards. And I think this is the political time bomb in these economies. And I think we're seeing it in the United States right now, where people do not like their standard of living going backwards because their wages aren't keeping up with the price of everyday goods and services.
What happens, Warren, if that inflation situation is not as benign as the RBA thinks it will be?
Well, I think that's what most economists are worried about. I certainly have been for some time. And you're looking at the anecdotes, you're hearing things on the ground. Just listen to Coles and Woolworths. They're telling us they're going to be seeing a lot of price rises come through, and price rises for products that haven't moved for a decade. So something is happening there. So I think the RBA is taking quite a bold stance on this, and I think we're going to see price rises come through, and I think we're going to start seeing them immediately. I think they're out there happening. The key here is wages, which we get an update tomorrow. We only get it every 3 months, but the ABS releases their wage price index tomorrow. And the governor says it's going to stay low. It's only at 2%. Wages do lag, but I am concerned that we're going to see inflation pick up because of these global pressures, the energy cost pressures, various things happening. But wages aren't. And of course, this could be a real problem for the government at some stage, maybe even ahead of the election, if these pressures are starting to emerge now, where you're seeing people's standards of living go back in this country.
Well, you and I remember that pre-election rate hike back in 2007, wasn't it?
Yeah, well, the governor went to some lengths today to actually say they really can't see a scenario where they have to hike rates next year. There's a couple of us who think they are going to go at the end of the year. There's one forecaster, a very experienced forecaster, who thinks May, which will be right before the election. And of course, there was that famous episode where we got a high inflation number in 2007, and the RBA moved literally in an election campaign, saying that they're independent, they need to go when they need to go. Now, it's a low probability now, but what's happening in the United States, if we start to see that play out here, you never know. That could be some real risk for the government, and of course, risk for this economy if rates have to start going up, next year.
So to pick up on that point then, the risk for the economy, how does that play out in an economy where the housing prices have been soaring pretty much across the board, and along with it, a lot of borrowing?
Yeah, well, I mean, our housing market has essentially been repriced, for a lack of a better word, for these levels of interest rates, which is a 2% mortgage rate effectively, and it's not going to go any lower in any time in the foreseeable future. And I think if we get a hint that rates are going to go up, then that market will run out of steam. And of course, if you start to see rate hikes, and of course fixed rates are already moving now, but if you start to see the variable rate go up with the RBA cash rate, then I think you're going to see the housing market go backwards very quickly. It could fall 10% quickly and maybe even 20%. So we're very vulnerable to rate hikes. I think this is why the RBA governor is trying to emphasize that they're not going to go up anytime soon. But everything hinges on inflation and to some extent on wages. And if all of those variables, those inflation and price variables start moving, if the labour market tightens up, then this could play out pretty quickly. But at the moment, the RBA is very benign on this one.
So in that context, is it important to reopen the borders, not just to travellers, but to migrants and skilled migrants as quickly as possible?
Well, you're hearing this across the business community, and it's obviously a very politically difficult issue. I think there's some skilled migrants being allowed into the country, but really the great mass of students and short-term visa holders, as well as permanent migrants, is not going, to really take pressure off our labour market until the borders are open and those programs are up and running in full swing. And that's just doesn't seem likely in the next 6 months. So I think there is a potential for a labour squeeze, whether it shows up in the official data. But if it shows up in terms of business operations, they're going to try and pass it through to their customers, the increased cost of doing business, and of course that'll be inflation. So I think it's a very tricky time for the Australian economy, tricky for business too. But the sooner we get the borders open, I think that'll take a lot of pressure off and help supply that marginal labour to many industries that have relied on it now for over a decade.
Warren, finally, one of the things that the Treasurer and other economists have been pointing to is this latent demand that throughout the pandemic, people have not been able to spend as much, and therefore, as we're coming out of it, we'll be ready to spend, and the recovery will be driven in large part by the consumer. Is that fair to say, or will there still be a bit of a handbrake given the looming election and uncertainty around the outcome?
Look, I don't think the election's a big problem for consumers. It might be for business, into next year. But what we're seeing right now is something we've never seen in this country before, is essentially a major transfer of financial capacity from the government to the household sector. My calculations have excess household savings. So this is savings is over and above what they would have done anyway, of somewhere around 150 billion. Now that's somewhere between 12 and 14% of annual consumption. So if only a fifth or a quarter of that is released into the economy next year, consumption's going to boom. So that's the basis of the government view and many economists' view. And we haven't seen it before, so we can't be precise, but there is a real possibility that we're going to have a consumer boom over the first half of next year, which will be great from an economic activity point of view, but it's going to put a lot of pressure on resources in the economy, notably labour. And of course, it's a very easy time to put your prices up when people are happily spending. So you could get that inflation. So I think that's the consensus. There's a lot of money ready to go. And we could have a very, very strong economy forming up right now. We're bouncing out of these Delta lockdowns as we speak.
Warren Hogan, Economic Advisor at Judo Bank. Thank you as always. Appreciate it.
Thanks, Kieran.